we're just here to present our N1 Plus product and also One Land product. Just give you a brief introduction. N1Holdings is a ASX-listed financial service company. We've been doing partnerships with Home Loan 789 for a while, and we have what we call vendor finance product and previous referrals, and we hope to do more business in the new year, obviously. First of all, N1 Plus Loan, as we discussed before, is our own brand lending product. It's a home loan product. We have our different founders, but we are the lender. We have our internal credit. We help approve the loan, and you come to us, we give a quick decision. I'll quickly move to the very last page. So you can see this is actually our two main products, where we are the actual lender. Yeah, so you can see on the right-hand side is N1 Plus, that's the home loan product, NCCP. So it's a normal home loan, 30 years loan. We can do full doc, low doc, self-employed, PAYG, credit issue, no problem. And also we have a One Land product, which is our private lending, commercial and private lending product. That one is really for those really urgent settlement or pure business purpose lending. So we will require the client to have a ACN, so they have to be a company entity for the borrowing structure. We can do first mortgage, we can also do second mortgage. The settlement can be just within days. Usually it's 3 to 5 business days is enough for us to settle the loan. And that one, we are the lender and we are also the funder. The funding is in our own account. We actually are the internal credit for that type of lending. Can accept any residential property, apartment, house, metro or non-metro, Sydney, Melbourne, Brisbane, any city. We don't have a restriction on that. We look at each individual case always on a scenario base, case by case. We can discuss the solutions we can offer for your client. In terms of the actual requirements, besides one-day ACN, we don't need any credit score. We don't rely on the credit scoring system. We rely on the independent valuation report and also clients' exit strategy, such as they give us a reasonable repayment plan. For example, sale of the property, refinance to another lender, or maybe they have other source of funding. They can make the full repayment in certain terms. The normal long terms is 3 months to 36 months. Our average at the moment is about 6-7 months. So usually your client will be looking at a within 12 months is their repayment for that one. Okay, I think that comes in handy for a lot of your clients in second mortgage. If they have their loan with a first mortgage bank, for example, a major bank, and they now require top up or they need to settle at the urgent time frame, that's where we can help for them. Okay. Any questions?
Third question, do you check the credit score for only the business or personal?
For both.
For both.
We will need to still have a privacy side, so we still look at it, but we don't rely on the credit score. Say, for example, they have...
Because a lot of people lost their job during COVID, and that affect the credit score, right?
Which is fine. Which is fine with us. The lowest I've seen is about like 2 digits score, less than 90, and we still can accept it, as long as we know that there's a reason. Yeah, because this part, we're actually doing the lending to the business, not to the individual. So if they have their other loans or any issue with the personal debt, it's not really a big thing for us. Okay. As I said before, we mainly focus on the valuation, the quality of the security, and also a valid, a reasonable access strategy. Okay, and that's One Land product. Again, on the other side is N1 Plus, which is our mortgage manager product. That's a normal 30 years loan, which you probably see more for your client buying property, normal refinance, cash out. Our main advantage is that fast turnaround in 24 hours for an initial assessment, meaning we give them a conditional approval in 24 hours. So we have everything ready, we can issue a conditional approval, or it could be formal approval if we have the valuation done up front, and that's within 24 hours. Comparing to the bank, at the moment, it could be a few weeks, some of them maybe even more than a month. We can still maintain that 24-hour turnaround. That's really important for a lot of clients needing, say, waiting for just the cooling off period, or try to get the property in an urgent time frame. We also have our low doc product, which is one method of the all doc income verification. Can use one of the three: accountant's letter, business bank account statement, or BAS. So we can use one of them to be the income evidence, so can get the loan formally approved. So that's actually a really good one for a lot of self-employed clients. Also, we have our 1 year financial full doc product. So if the client got, at the moment we can still accept 2020s. So if they have 2020 financial, 2021 not yet ready, and 2019 doesn't look good, we can accept 2020's financial, 1 year only. Flexible cash out policy, we have recently done a few of them. If they need to use the money for future investment, buying a property, share investment, business purpose, we don't have a limit. They want to cash out $500,000, $1 million, as long as there is a valid reason, together with some supporting documents, we can accept it. We won't have a control of fund. For example, some lenders, they might give you the loan, but they said they have to wait to actually use the drawdown to give you the money. So they approve, but when it comes to settlement, they need to wait for you to settle the other property you're buying to do it. We never do that. Once we have the loan formally approved, we move to settlement, settle the fund, and later on, if you buy the property later or change of plan, we don't really control that. Unlimited loans and paying out credit cards, personal debt, ATO debt, that's another niche for us. If your client, self-employed client, got ATO debt, usually banks doesn't accept them, we can do it. We can actually wait until settlement for the ATO debt. So they don't have to pay out the ATO debt to come to us. We assess the deal based on the fact there is still ATO debt, and then at settlement, we require them to provide us the payment slip. We just help pay the ATO debt at settlement. So they can get a formal approval with us when they still have ATO debt. Unlimited loans, that including consolidation as well. So if the client got multiple credit cards, personal loans, we can consolidate them into one loan when they do refinance transaction. Business purpose is fine, we mentioned that before. Prime, near prime specialist, and that's our free product. Mainly, that's the difference is their credit history. For example, we have one this morning, the client rings, they have $60K unpaid personal loan, which is with a bank. So obviously that type of client, any bank will reject the application. We can still do it, and we did that on our specialist, which is probably the most expensive one. That one we offered 4.99 together with a 1.15 risk fee, which is definitely acceptable to the client, because it's up to him. He can later on pay the bill and refinance to another bank, and he also have the option to say just forget about it, still unpaid, because we accept the bill as an unpaid debt.
Mm-hmm.
Yeah.
Yeah, sorry to interrupt you. So you just mentioned about the risking fee. So
Yeah.
I want to know this is the buyer need to pay the extra, or can combine in the loan amount?
That depends on the actual borrowing percentage, LVR. If the maximum LVR reached to our already the maximum requirement, then he has to definitely pay that out of pocket himself.
Okay.
In my scenario, he asked only for 75. So 75 to keep that interest rate 4.99, he just paid that himself.
Okay.
Yeah. If you want to go up, we can still do it. We just need to move to the next LVR level, where it could be a slightly higher interest.
Cool.
Sorry, can I ask about the fees for the loan account adjustment and also about the load of finance? So there must be like two different fees. What sort of like the fees are involved with the?
Yeah, we can send you a detailed rate card later on. Because it's all different for different LVR.
Yeah.
Starting from 65% LVR up to 90-95% LVR. A typical low doc, what we can do, for example, really common one is when client using accountant's letter plus self-declaration form. That one, the rate starting from 3.19 up to 70%, no risk fee.
Risk fee is 1 point something?
No risk fee.
No risk.
Oh.
So standard one with accountant letter, just one accountant letter, up to 70%.
Yeah.
Interest rate is 3.19, no risk fee.
How much is risk fee? 1 point something you said?
No risk fee.
No, before you said if you charge risk fee.
That's for higher.
That one is for higher one. That one is for like a 60,000 unpaid debt. That one we charge a 1.15
Okay,
risk fee.
1.15 on
Yeah.
top of 499.
Yeah, but that's not really common. I don't think many people have that type of inquiry always with unpaid debt.
Yeah.
Sorry, for the redraw facility there, I mean, is there like anyone can do it? For the redraw, like if somebody has to withdraw money from the loan account, they have to invest somewhere or some other reason.
You mean the
Retail facility.
Yeah.
So all our accounts, all our products for N1 Plus is 100% variable loan with a offset account.
Offset.
So they use offset to help reduce the interest charged. We still got redraw, but most people they just use offset.
So maybe half and half, like half fixed and half redraw, like.
We don't have fixed rate product for the time being, so all our products is written under a variable loan with 100% offset.
Offset.
Yeah.
I have two questions. One
Yeah.
is that the interest rate you mentioned, is that a honeymoon interest rate?
No,
The three-
all the interest rate we have is a normal long-term ongoing rate.
Okay.
Our long-term standard 30 years,
Yeah.
and we can do up to 5 years interest
Okay.
only.
Yeah.
So it's no honeymoon rate.
Cool. So the other one is there any minimum loan time you want? So like someone they say you must borrow money from us like at least 1 year, otherwise about commission things.
We
Yeah.
don't really have that.
Yeah.
But if your client, for example, they are actually buying this piece of land, later on it's a construction,
Yeah.
a development, we have to be careful, because if we know they are going to build a house in 6 months' time, we're not going to look at this deal. So in that case, usually what we said is with our referral is we present this, say the client purchased this land, or this old house, they are going to rebuild it in another 2 to 3 years. So during the long term, they won't really do any construction, then that's fine, we can accept it. And once the loan settled, of course, if they want to pay out or they want to do anything else, as long as they keep paying the repayment, that's fine.
I think he was trying to ask the minimum term, like with some brokers that they want you to keep the loan for more than a year, so the commission
Yeah.
wouldn't be clawed back.
Oh,
So we don't have a minimum term here, but of course the commission terms do have a
Yeah,
1 year or 2 years.
our commission terms
Yeah.
is 1.5 years.
Yeah, 1.5 years.
Yeah,
So there is
okay.
still
It's still
a
a
period of
commission.
time.
Yeah.
But we can't force clients to stay with us, but we can help them with whatever they would like us to do, so refinance to other products or cheaper products in the product
Some
suite.
customers they want to move their loan after a few months or even like less than 1 year.
Yeah.
So move to the bank.
Okay.
I think the lower interest.
Yeah,
So
which is fine. We can also help them do that if you want us to. But if they just want to use it for a short term because we have a quicker turnaround, can help them settle that first, which is fine. Yeah.
Sorry, about the 30 years term, is it any age, like that sometimes bank doesn't lend if someone is 55 or 60, they don't give a long term.
Age limit.
Sorry?
Yeah, the age.
Yeah, the age limit. So is there any age limit? No.
We will definitely ask for an exit strategy when it comes to 55 and above, but usually for that type of client, they are looking for an investment. So if there is an investment, they have exit strategy, we don't have a limit on the age. I'll give an example. We've done one December. He's 60 years old, and he's buying even an owner-occupied property. I would think we might need to reduce that a little bit, but because he got a very strong exit strategy, then we actually did it for 30 years, even an owner-occupied property. Yeah, but that's not very common. The usual one we get is that they're looking for by investment. So if it's investment, no problem. Usually 30 years is the one.
Thank you.
For applicants under 40, we can do up to 40 years. Long term,
Yeah.
which means lower repayments each month
Okay.
for younger borrowers.
Below 40.
Well, this
40
is kind of
years
attractive
long-term.
offer because
Which
banks
means you
sometimes-
actually borrow more because the
Right.
repayment per month is lower. When we do the assessment, you will find that they have more excess cash for the loan, supporting the loan, which means we give our clients more borrowing capacity. And some typical, like my experience, I just did this N1 Plus loan just recently. My borrowing capacity increased by 400K. And in some different cases, it could be up to 1 mil. So it really depends on different scenarios. Vincent will introduce us like why and how. But that's one of our largest advantage is borrowing more. And also the investment interest only product is very competitive in the market.
Okay. I'll quickly go through our residential product, prime, near prime, and specialist. As Penny mentioned, for example, let's go have a look at a near prime product. That's where we can do the 40 years long term. So as long as at the end of the long term, client is 80 or less than 80, then we can offer this 40 years product. So that means a lower repayment overall, monthly repayment, and a better borrowing capacity. So our borrowing capacity is the main niche for us. So a client come to the bank, they may borrow 500,000, come to us, they can borrow definitely much more than that. We have tried that, and we have a real case settled. They borrowed actually almost 900,000 more than major banks. And purely just because our calculation on the existing loan is based on the actual repayment. So a lot of clients, they have a lot of investment properties, repayments already, and that's the one stopping them from borrowing more when they purchase the next one or even refinance. And that's where it's handy for the client to consider our product, because we trade their existing repayments just based on the actual repayment. If they're paying interest only, it could be very easy to maintain that repayment and get another new loan. Under our near prime, the good advantage is that we can accept refinance ATO debt, unlimited cash out, and also that one we mentioned before, one form of income evidence in low doc. That's where you use the, for example, just the accounting letter to settle the property as a low doc. Yeah. With prime.
Prime is like more income supporting documents.
Yeah. Prime. That's the best one, the best interest rate. For example, our current interest rate, owner-occupied starting from 2.25, and investment starting from 2.57. Prime, usually there's no risk fee, up to 85%. And this is another highlight, up to 85%. We don't charge LMI, we don't charge lender mortgage fee, risk fee, and this one loan amount now is up to 1.25 million. Yeah.
Suitable for apartments or smaller size.
Sorry, can I ask another question, which is for the black market? A lot of people are financial bad credit history.
Yeah.
Yeah.
So that probably a lot of people sometimes they can't get a loan, and some company are interested. So if you have that option, any option.
Then we look at
Yeah.
specialists.
So that's a specialist product we look at. For example, the one I mentioned before with unpaid debt. That one is definitely our specialist product. We can allow unlimited default up to 1,000, or if it's more than 12 months, any amount, we can accept it. And also mortgage arrears, and also on the unsecured debt, they may have late repayment or existing arrears, we can consider them. If they have bankruptcy, that need to be discharged before we can consider. But if that's already discharged, then that's something we can consider.
It's after 10 years.
So it's, some of them has a paid default as well sometimes, like, that stays in the credit file.
They have paid default.
Sometimes, like, those, like, a lot of people has a paid default. The pay, but it's still default.
Yeah, that's fine. And if that's the case, we could be potentially even look at that under our prime or near prime. Depends on when they make the payment to the default, and also when that default originally listed on the credit file.
So where we can find these all details more, we can, like, we got the information, but if we need to access it to go get
This is very
more
compelling.
refreshment,
Yeah,
sometimes we need to show
So
the
this
client.
is the niche. We're not like really compete with the bank. We want to become more flexible, but lend more money to our borrowers, as well as more flexibilities allowed in the client's history, credit history, as well as the income, formal income. So we can't, compete with the bank directly. We try to find a niche to work with the bank, like in some areas that they don't look at or they are less competitive.
Yeah, it's really compelling, especially for those people who
Because bank has certain sort of policy they can't overlook.
Yeah.
But as a finance company, they do, right? They can do like a lot more easier way.
Yeah,
to
well,
get
we
money.
want to tend to be more flexible, and when the product was designed, initially we look at the self-employed. They shouldn't be penalized because they're self-employed and they haven't done their financials.
Yeah.
That's why the low dog product was very originally introduced by the founder, who's currently our NED in N1. So he said the reason behind it was he thinks that self-employed people, they actually is a better group of people who can borrow. So he designed a few policies and credit policies to fit into that category.
because their income is not capped, could be go up.
Yeah, and they know they just too busy. Like we want to be more flexible. Like we only need accountant letters or your basis or bank statements that we satisfy. We don't necessarily want them to have all the full financials, 2 years, to help them. We want
So
to
this
help
is the
them.
loophole.
Yeah, we'll try to help them to
Yeah.
get their loans. Yeah, of course there might be some strategies that we can play in that space.
Make it work for them.
Yeah.
Because our mindset is that they're, say, for example, providing accountant's letter or BAS, and that's a true reflection of their current
Yeah.
trading status. They might not making that much profit last year, but for the last 6 months, they're doing really well, and we use that. Because when we ask for BAS or business bank account statement, we always just ask for the last 6 months, most of recent 2 quarters. That's what we focus on. Yeah.
These documents are very easy. Yeah. I mean, the accountant, but those letter and all that. So this more helpful.
Yeah, accountant's letter, we can send you later on our example accountant's letter. For the accountant, they're just providing all the factual information. Profit most recent years. If they want to make other comments, they can, but they don't have to. And also there's a disclaimer, as accountant, they are not really liable for the approval of the loan. So they're just purely disclosing whatever the factual information. Yeah.
So which business activity statement you could use from this year, last year,
Most recent 2 quarters.
most recent?
Yeah. So from now, we'll be using December and September.
If not, business not doing good last week, last 2 quarter, can't use.
Yeah.
Only when doing good.
Yeah. If last 2 quarters not doing good, then BAS will be an issue. Business account statement will be an issue, but they can still consider using either accountant's letter or financials. If they're doing well, 2021 financial year or 2020, we can still consider. Yeah.
If you don't have anything, then we go to one land. We don't look at financials.
Yeah.
It's a no dog. product.
So this product,
Mainly focus on the security.
yeah, maybe just the security access strategy, we don't look at financials.
So
And say, for example, you do a 3 to 6 months on one land, and during that time, they can fix their financials, prepare to refinance to N1 Plus or refinance to another lender.
yeah, so the one land is a short-term solution for the client to settle the loan. We always find
Loophole.
our clients, yeah, they need a settlement urgently, or for example, the bank require additional information that they couldn't provide instantly. They settle with our one land within 5 days, for example, and then in the next few months, they try to, gather the documents that the bank needs, then refinance to the bank. We have done quite a few cases for urgent settlements, more like a bridging purpose. Yeah, for one land, so it could be both, that we can use both of the products.
If there's any inquiry, feel free to contact us, contact me, contact Penny. We can definitely help you provide feedback or try to contact the client to provide more solutions. We do have restrictions, for example, some high-density building, so feel free to check with us up front. There's a lot of other things we can do. For example, we can do house and land package construction loan. We can do vacant land, but it also comes with some other restrictions. So case by case, scenario-wise, we can always check and before we make a recommendation to the client to provide the correct information. Okay. Any more questions?
Can I ask a question about my client?
Yeah, of course, scenarios, yeah.
Yeah, I've got a client who's got a commercial property.
Yeah,
He doesn't have property. He's a first home buyer, but he's got a commercial property.
okay.
So I don't know. He wants to buy. He only got 25 grand,
Mm-hmm.
and
You
I
need
don't know
cash
if
out
that
from
one
the
we
commercial
could
property?
use because he's excited to buy, but he doesn't have the money. But he's got the commercial property.
Is there equity in the commercial property?
Yes.
Yeah, so forgot to mention, our N1 Plus, we also have our commercial product as well. And that one, including full dock, low dock, similar like our residential. So we can help that client with cash out.
That's as collateral.
Yeah,
The
cash
commercial
out.
property?
Not really collateral, but we can consider, for example, do that first, cash out from the commercial property, and then use that one
To buy.
together with his existing saving to buy a new property. Pre-approval, do that together. Yeah.
Okay. The thing is, he's looking at the off the plan.
Yeah, so we can cash out from the commercial property first,
Yeah.
pay down the deposit, and maybe after a period of time, we can do another loan.
Yeah, so off the plan
settlement.
settlement.
I'll call him and then I'll give you a call.
Yeah, sure.
So he could use this one as his deposit.
Yeah.
Yeah.
Okay.
As long as it has equity to be released.
Okay. I don't know much about how much is equity on the. I'll have to find out.
Yeah.
And
So
then-
when you say cash out, so it's gonna be refinance the old properties as well?
Yeah.
Yeah,
Oh, okay.
correct,
So
yeah.
there will be another cost, right? Establishing new loan for that?
New commercial property, yes. Unless, for example, if he got a loan with the existing commercial property with a bank, for example, then he can go ask his bank to try to top up. That's the only way to avoid to refinance. Because otherwise, if we for better borrowing capacity or fast turnaround, whatever reason, if they come to us, that's a refinance transaction.
And how much is interest rate for the
Commercial,
Yeah.
starting from 3.99, but we have to look at the actual LVR and his situation. Like which type of income document he can provide is all different. We can send it to you, read and cash sheet, no problem.
Okay. I'll talk to him.
Yeah.
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 I think a typical N1 Plus client from my experience in the last few months, that when we have this interest-only investment property interest-only promotion at 2.98%, I choose that because that gives me more borrowing capacity, and I don't need to principal like a refinance to instantly save me like $2,000 a month in principal repayment, because it's an investment property.
Sorry, how
to me-
long is the time frame for that? Like how long time can continue that only interest?
Interest only, It's 5 years, right?
Yeah.
So 5 years, yeah. So that will release a lot of cash per month for me. So plus the interest rate is 2.98. I was with Westpac. Their interest only for investment property is 3.59. And because their principal and interest is 2.89, I choose principal and interest because it's a big gap in the interest only and principal interest. But with this product, 2.98, to me, it's a very small variance, and I'd rather not to pay the principal portion and keep my principal with my savings I put into the offset account of my home loan. So that will maximize my deduction for my investment property. So for that, this is a very typical client investment property. Maybe they have multiple investment property because N1 Plus lend more, much more than a bank. Like, for example, I fixed my home loan 1.99. So when I calculate my borrowing capacity for that portion of the loan, it's only 1.99. Rather than if I go to ANZ, they actually calculate that based on 5.99 because they have their assessment rate at 5.99. This 4% give me like 400,000 extra borrowing capacity. So that easy. We've got other clients like they couldn't borrow anything from CBA, but they borrowed 935,000. So she can actually buy an additional property straight away from that because she had multiple existing loans. So that will actually be a very typical client, multiple properties, multiple loans, want to invest more. So I think like those clients are your clients too. Like they want to buy more, invest more in the property market. But in some cases, the borrowing capacity might be a restriction. But with N1 Plus, we tend to give them more, and plus give them interest-only option, help them to build more, easier to build more property portfolios.
This will help our sales because a lot of my clients don't have money.
So N1Holdings
So
is
you
the
can borrow more, but
easy
they might
bank
have more
funding?
properties.
Any bank funding?
Any
The funding.
Just to
funding
clarify,
for the-
this is not from the bank, right?
This is not from the
The
bank.
funding is from Pepper Money.
Pepper
Pepper
Money,
Money
yes.
is the largest Australian or largest alternative lender. So they're not banks, but they are
Yeah, the
one
funding.
of the largest lenders. Their money is from Westpac NAB. So it's like really, ultimately, we work for the bank. Like
Yeah, yeah.
bank, they have all the restrictions by APRA. You know,
Only paper money or?
Sorry?
Sorry, only paper money? Only,
Yes,
only paper
currently
money.
this product is backed by Pepper Money.
Okay.
Branded as N1 Plus. So the founder is them. So and they just listed to on the ASX, and they have a long-term plan of growing in the market. So they're more stable than smaller lenders, and their funding and warehouse, their funding money source is stable too, mainly from big banks, from big four banks. So big four banks have allocated a certain amount of money to non-bank lending products, which give them more flexibilities because they have a restrictions of total percentage in the investment properties. So they're more like pushing the owner-occupied. So that's why we are pushing the investment. So with the two, we help to build the market together. So yeah, ultimately it's banks' money.
And what's mentioned in Penny's example, that 2.98 investment interest only loan is a 85% LVR.
Yeah, 85%. So I actually borrowed more.
Still available and no risk fee, no LMI. Yeah. So that one can save the client LMI, maybe easily a few $1,000s if they go to a bank. No LMI, no genuine saving required, 2.98 investment
I've got
interest
another
only.
question about another client.
Yeah.
His parents has a property in Marsden Park. He reckon it's worth $3 million. And he's 50 years old. He sold his business. He had a franchise. He sold his business. He's got 200 grand sitting in the
Sit
bank.
here.
He's got 200 grand sitting in the bank, and he
Sure.
wants to buy. He wants to put that money into something investment using his parents'
Equity.
Yeah, equity. It's
Yeah.
not under his name. It's under.
So the parents need to be the borrower. So we
Yeah,
can't like
so we
provide.
won't be able to do the
Yeah.
guarantor one from the parents'
Yeah.
property. So
Yeah.
if that's the parents' actual property name on the property, then the parents need to be the borrower. Parents need to have income to establish they can repay
Yeah,
the
the
loan.
thing is, his mom is 80 years old. That's
Mhm.
why he sold his business so he could look after his mom, and he's only on the care pension.
Yeah.
And
Yeah.
it's
So
also-
this is more like, for all the
So there's no-
NCCP loans, we want to make sure that the borrower has the benefit, that
Mm.
people provide guarantee have the financial benefit. It's more like a regulatory requirement that we can't like take a relative's property equity out
Mm.
for other investment. It's more, it's
Tell me
like
more
a
about the
regular-
reverse mortgage.
Yeah,
What's that
reverse
mean?
mortgage is different, so the parents still will be the applicant, and they actually have a set of LVR, so they take money out based on, in the past, like 60 or 65% LVR, so they take that, and then capitalize the interest along the way. So when they pass away, then they calculate the ultimate balance. It could be, already up to 100%, then the property belongs to the financier. Yeah, but that's
more
a
risky.
whole different. That's a whole different thing. But reverse mortgage maybe to the parents has benefit that I actually use the equity from that, and normally I wouldn't be able to borrow from a bank if I don't have any income. But I use the equity. It's more like an equity release as well. Yeah. But that's different. We don't offer reverse mortgage. And to be honest, reverse mortgage wasn't that popular nowadays. It was like maybe 10 years ago, a lot of people, financial advisors, are talking about reverse mortgage. But now maybe it's more like eating out equities, and maybe people live a bit longer. Then with the interest, they probably left with nothing when they're like really old. Then they don't have any equity, and the bank will be able to kick them out because you don't have any equity anymore to repay the loan. So if someone live longer, they have the risk of having nothing.
So he's got no chance of.
For
Unless-
that particular case,
Unless he inherits the property.
yeah,
But he
or
doesn't have
unless maybe the parents gift the property over to him.
Like for $1. or
No, it
something,
was
right?
still,
But
you
the-
still pay
I
stamp duty.
suggested that to him, but he said that means I'm gonna pay for the
Stamp
stamp duty.
duty.
Yes,
it's
stamp
That's why
duty
you're going
is
to
up to the value of the property.
Mm.
And yeah, so, but it might not be something that the parents want to do.
And he's in the will,
Oh yeah, but
Yeah.
it's at this stage not that.
so there's no chance. He's calling me, so. Did you
Yeah.
find a loophole?
Well, is this the parents' primary residence, right?
They live in there.
Yeah.
In the
They
property.
wouldn't want to sell that, or they wouldn't want to, downsize, release
No.
some capital.
Yeah.
No. I'll try to talk to him again and maybe recommend you, and you can talk to him or whatever option he has, so he can, because he wants to put his money into something that done in the bank. Yeah.
What we can do, like if for people with very little deposit.
Yeah, he said 200 grand though. That's
Yeah,
enough.
200 grand. That's not too bad.
Yeah.
Because we can offer up to 95%.
Yeah.
So if using that money as a small deposit, even we do the loan more than 80%, that might still be one solution for him. He won't be able to access parents' equity, but he can still make his own investment or property buying. Yeah.
Even though he's only on Centrelink care pension,
Pension is
he's on a care pension. He's not working because he's looking after his mom.
Is that all income?
He said he also manages his mom's pension because his mom is old, so the money goes to him.
Oh no,
Yeah.
it is that part. But
No?
is pension income one source of income that we can use?
And also he has some investment that gives him dividends, so I don't know how much
Yeah,
dividends.
so
We can have a look,
Yeah.
but it depends on the income. If the only income is the pension, it might be hard. But we can definitely consider loan. We can definitely consider that as an income for the servicing purpose. But we want to also establish this other income, and also that income can actually help him to for the support of the future repayment. So we can have a look, like you said, dividend, that might be something we can use, and also past tax and total income. Looking after mom's pension, that's not really, because the pension is still mom's name. So that's not really
His
applicant's
income, yeah.
income, yeah.
And also have some side business that's not in the books, not counted.
Yeah. Well, unless you want to
Declare,
declare some,
yeah.
like here.
Yeah. Or using low doc accountant's letter, that might be something we can. Don't want to overlook any, potential opportunity, but, we can always have a
Yeah, I'll
quick
just
check.
pass you, I'll talk to him first and then pass you his number or give him your number and
Sure,
we'll give you a call because he wants to put the money on somewhere
Yeah.
than in the bank.
yeah.
Yeah.
Give it to me. Yeah.
How old is this applicant?
Oh, he's 50.
Okay.
Is that like possible?
Yeah,
Yeah, 50 is a good age.
yeah, that should be fine.
Because you're not allowed to discriminate, right, for lending?
No,
Okay.
it's okay.
Yeah.
People tend to be live longer
Yeah.
these years. He is still young.
Mm.
So contacting to the N1, we contact to you or directly to them?
Yeah, you can just contact them with them.
Directly.
Yeah.
Like because sometimes we may have client and
Scenarios,
all
yes.
so, yeah?
Yes,
Yeah.
definitely, yes.
Okay, so
Because we have really a full range of product, like one land or one plus residential, commercial. So if you have a client, typically they might not getting an offer or solution from their bank, feel free to contact us. We can give them a quick call.
I have a client, previously, long ago, I sold the house, but they need an extension. And she applied in a loan for Westpac.
Yeah.
They had 50,000 was approved, but she need 100,000.
Yeah, well, this is a typical
But she
scenario.
got two property, one she living, other one has a good equity in it.
Yeah. So we probably will be able to lend more,
More?
because we have a loose, when we do this
And also she have
servicing
a job also
calculation
regularly
or
come as well.
capacity. So, we
We
can.
all
definitely,
it's frequently come very different places because when we talk to the people, there's always some sort of people, and that's because anything could come anytime. But it's always come with the finance.
Sure. Like we said, if you have any clients, feel free, we can have a quick discussion, and then we can call the client to do that as well. Just a very quick discussion with the client, let us know whether or not we can help, or like in which area we can do. For example, if like using, parents' equity, that's a no, but some other issues, especially
Like a
borrowing capacity.
home and business, like one of the person who has to combine his home loan with he used to buy a 7-Eleven. So he has to combine this like business
So
loan.
business
Yeah.
purpose cash out.
Yeah, we can do that.
Yeah, we
so,
can do
so
that.
there's a many different type of
Yeah.
things.
Business loan, commercial loan, that's definitely
Yeah.
something we do, and we can assist.
And the
them
house
as well.
extension and all that.
Yeah.
Extension, question mark, not sure, because if you do structural changes to
No,
the.
that's
He's
council
asking
approval.
extension for the property
That's the
settlement,
council
yeah.
approved too.
Yeah, no, council approved,
Yeah.
but if he actually knock part of the property down, that will, we
No,
need to
that's
look
part of
into,
property. Part of the existing house, like it just extending the,
extend it, yeah. I
In the
don't know,
main house.
whether it's a major renovation or a structural change, that could be different, we'll see, we'll look at
oh,
the.
okay. But that same person already applied to Westpac, got 50,000, but she need 100,000.
Okay.
Yeah, because they have other houses as well,
Oh, they
right?
might have other.
Yeah,
Another,
yeah.
like one is living, one for
Yeah,
Westpac.
Yeah.
No, it's all right. I just say maybe after that, back your WeChat.
Okay.
Yeah.
Sure.
Yeah. So if everyone have any question, you can just add on WeChat and ask them like afterwards.
Okay.
Okay.
Oh, yeah.